Good morning, this is Paul Gladen, Director of the Blackstone LaunchPad at the University of Montana, and I'm joined today by Liz Marchi, who is up in Polson, Montana. Liz is a tremendous supporter and participant in the Montana entrepreneurial and startup community, and Liz is joining us today in particular with her role as founder of the Frontier Angel Fund and Frontier Angel Fund 2. Liz, welcome.
Good morning, Paul. Thank you so much for having me this morning.
So today we're going to talk a little bit about kind of angel investing and angel investors and what they mean to startup businesses. So perhaps first though, do you want to just give us a little bit of an overview of Frontier Angel Funds and what they do, and then we'll get into what angel investing is in a little bit more detail?
Absolutely. Thank you, Paul. As I worked with entrepreneurs and I came to Montana in 2000, I heard everywhere that there was no money, there was no capital for startups. And I knew there was money everywhere. It just wasn't very organized and it wasn't very acceptable. And as we all know, regardless of the kind of business you're in, capital is sort of the fuel that cranks the engine of business. And different kinds of businesses take different kinds of fuel. And the angel equity capital tends to be the required fuel for innovation, for companies that have unique proprietary products and services, sort of your non-traditional asset industries. So fairly small slice of the parking lot, if you will. But I began as one of my job objectives was job creation. We knew that equity-backed companies created twice the jobs of bank finance companies, and that they also were at significantly higher salaries, which has always been one of our challenges in Montana. So that's sort of how this all came about. We had no idea that we could raise money in Montana, how much we could raise. So initially we set out with Fund 1 in about 2003 to raise $500,000. We wound up raising close to $2 million, and over an 8-year period, leveraged that into about $5.5 million invested regionally. And rarely do I do this since I am a startup gal, but did it again. So we are actually have had a first close for Fund 2. We've made two Montana investments, and then we've done 2 syndications. So cool. We're off and running. So there's angel capital alive and well in Montana.
So you've, I guess in startup language, you've validated the model that there is an opportunity for angel investing in Montana.
Absolutely, and that was a big part of our, it's a very good question. We weren't sure, and not only were we not sure, sort of nobody in America was sure what a rural fund would look like, because innately we knew that venture capital is concentrated in a very few markets. It's a very defined culture. It doesn't particularly overlay well to rural areas, particularly ours, where we don't even have a large urban center. So one of the things Fund 1 has enabled us to do, and frankly the entire angel capital community globally, is to have a track record, to see what the deal flow looked like, what kinds of deals we saw. And I've come to call myself now the grandmother of crowdfunding, because one of the things we learned very early on was that we had the money here, but we didn't necessarily have the investable deal flow to learn how to be good angels. Right. And so that over time, we actually in Fund 1, we only led 3 deals in Montana, but we made 15 other investments regionally. Boise, Moscow, Spokane. But there's, as we all know, innovation doesn't stop at the state line. Right. So that's had some great payoff for Fund 2 in that now I have investors from 8 states in Fund 2 that all wish they could be in Montana.
So you've made, in terms of sort of helping people understand what angel investing is, you've sort of made reference to sort of traditional financing, and angel is more for sort of innovative startups, and you've also talked about VCs. Help people understand sort of where angels fit and what sort of a startup is a good fit for an angel investor.
Excellent question. The kind of startup, first of all, is your aspiration as an entrepreneur needs to be to found, grow, and exit your business, because that's the way angels get their money back. There's a lot of misunderstanding about how we do deals. We do not make loans. We do not actually, we don't even do much convertible debt. We don't need to talk about that. But we generally, as angels, are the first organized money in a business. We love bootstrappers. We encourage you to bootstrap, because every dollar you bootstrap, you don't have to give away to anyone. Right. But as angels, we also don't want to own more than 50% of your business. In fact, we only want to own a small portion of your business. We don't want to grow your business. We want you to grow your business. So I really encourage young entrepreneurs, any entrepreneur, to think very seriously before they take any outside money and what kind they take. Most of our deals are not bankable deals. Most entrepreneurs have neither cash nor collateral, or cash flow nor collateral, which is what a traditional bank wants. Assets. And VCs, by and large, want your business to have enormous scale. And let me talk about scale. Scale is really sort of what's a reasonable expectation for your exit of your company. For example, we love a business that we go in that can sell, let's say, $25 million. We go in at $1 million valuation. We might put in $250,000. We would own 25%. Then you sell that business for $20 million, and you make money, and we make money, and everybody's happy. That is not a big enough deal for most venture capital firms, because they've got enormous overhead. Angels, frankly, are volunteers. VCs are managing generally other people's money, institutional money. They have a very strong need for ROI. Now, we want ROI, but we can be more patient. We are more patient because we want to make money, but we also have a second motivation, which is to build new companies in our backyard. So that I really encourage entrepreneurs to date any investor that you talk to, and talk to other companies that have taken investment capital from either angel groups, funds, or individuals, because this is a very important marriage for you that's going to last for a number of years. And it's one of the things I feel so passionately about organizing. We try to be very transparent about who we are, how we work. We're certainly a very small slice of the capital food chain, but we do think an important part.
So talk to a bit about some of the characteristics that a startup, an entrepreneur should be looking for in their kind of angel, because you're right, they come in sort of different shapes and sizes and flavors. So what are some of the things that when you're going through that kind of dating process you should be looking out for?
I think one of the most important things is sort of beyond the money, what do they bring to the table? And in the structure of the deal, learning to structure a deal is fairly complicated. And we have sort of a value system in our fund, and that is to be teachers and learners. And we like to say, first of all, we've made more mistakes as a group than almost anybody on the planet. Almost to a T. Everyone in my fund is an entrepreneur, has been an entrepreneur. We've made all the failures. So you want an investor who has been around the block, both in business and hopefully in investing. It pains me to see a lone angel investor having gone in and invested in a startup and had a really bad experience because they were bearing the entire risk alone. And it is, just remember, entrepreneurs, more than half of the startups fail, and but that's just the lay of the land. And we know as investors that more than half of our money is going to be zero. It's just the nature of the game. So someone who's been around the block, someone who really understands deal terms well. And I'm pretty high on people who work in groups. I just think there's a lot of. I have people.
Can you talk, Liz, just a little bit about that? That their angels do come both sort of solo angels, sort of angel networks, and then as you've got with Frontier and Angel Fund. Can you just help people understand the differences between those?
Sure. In 2003, when the Angel Capital Association started, there were probably less than 10 organized angel networks in this country. Band of Angels, and a network meets on a regular basis. Companies pitch, and then individuals write individual checks.
Okay.
So there's no committed pool of capital. An angel fund, as our fund is, means that there's pooled capital. It's in the bank. We're going to invest, make a decision as a fund, and then again, my individuals, if they like the opportunity, it always happens, will invest out of their own portfolio additional funds. So we call that a side-by investment. Loan angels generally write a good portion of the capital you're trying to raise. So it's a much more intense relationship sometimes. And generally, being a loan angel is a really difficult road. So that would be the difference. So as a fund, we try to bring a lot more structure around the process. We started out as a network, and that lasted about 6 months for me because I had no way of knowing who was writing what checks. There wasn't a lot of, I couldn't build that sort of track, portfolio of what's it going to look like? What were the valuations? What were the exits? What were the problems? So that's why we do a fund.
I guess the advantage of a fund and a network as well is you're sort of at least getting that kind of wisdom of crowds, both in terms of the investing decision and from the entrepreneur's perspective, that sort of pool of expertise that you can potentially tap into.
Absolutely. And almost universally, when someone comes to pitch our fund, whether we say yes or no, and we do say no 90% of the time, yes 10% of the time, they will tell us that it was one of the most instructive experiences they've ever had simply because of the questions asked.
Right.
Because in the room, you have a C-level consumer products person. You have a founder of a large technology company. You have someone who's a lawyer and done mergers and acquisitions all of his life for a corporation. So the global experience and the eyeballs, and frankly, just the consumer approach. In Fund 2, one of my very important strategic foci has been to get younger investors who are consumers. One of the sad things you learn as you age is that you don't really want crap anymore. So you're not out there cruising the aisles. And that's important. I mean, that's very important to be able to assess what the must-have versus nice-to-have versus don't care if I ever have kind of product or services.
So there's a few things there you said I think are important for sort of startup entrepreneurs to hear. One is, you said you accept maybe kind of 1 in 10. I don't know whether that's kind of typical or not, but I think just the idea to accept sort of rejection or kind of knockbacks is just part of the startup process, but you then want to say that that's also a very kind of educational experience for the entrepreneur. And I presume as well that not all of those knockbacks are like kind of, gee, this is just a bad business. It's just a question of fit as well in terms of the kind of investments you want to make and the relationships you want to form as well. What are you looking for in your startups, particularly in terms of Frontier? What are some of the characteristics, both in terms of the types of business and in terms of sort of entrepreneur characteristics that may be attractive or unattractive to you?
So in the types of businesses, we absolutely love software. We love software because the margins are high. The cost to scale is increasingly declining. So one of our biggest considerations in looking at any business is what is sort of the entire capital requirement to exit, because we know we actually don't have a ton of VCs sitting around that are kind of going to come in and put that $2 million to $4 million sort of valley of death next raise. Right. So we're very concerned about sort of the cash trajectory of the business and what is it going to take to get to break even. What is that going to look like? How big are the sales going to have to be? So the type of business, we are probably not a good fit for anybody who is manufacturing something that requires a ton of equipment, and frankly, those are things that you ought to be able to finance a little bit more traditionally.
Yep.
So we're looking for services, products and services that are somewhat proprietary. We're not really hung up on patents and that sort of thing, but we do like proprietary products and services. What's going to be the cost to scale and customer acquisition cost? What are the next likely sources of capital? Are you going to be bankable? Are you going to be able to do a line of credit, sort of sub-debt possibly? So we really look at that. So those are our sort of sweet spot businesses. And can it scale to, 20 or 25 million, and how rapidly? Then the other thing on the entrepreneur is we look at teams. And if there were one issue in the entrepreneurial ecosystem in Montana that I would like to see us really focus on, it was, how do we build teams? Nobody scales a business as a Lone Ranger. Right. It doesn't happen, ever. And the ability to find, a great sales team, a great innovator, a great, sort of manager, finance kind of person. So you need a team. And the point at which we want to see a business is when they have a fully developed product or service. And it doesn't have to be perfect, but it needs to be at a product ready state so that someone is using it, so we can begin to assess where the improvements need to be made. How can it be made better? An entrepreneur, we love coachable, of course, and coachable means that you know yourself. Business is hard. It's really hard work. We actually love someone who's had a colossal failure. You always learn more from your failures than from your successes. You own them in a different way. We need an entrepreneur who's willing to be flexible in negotiating valuation. So all of the above. And part of our culture at Frontier Fund, if you make it through our screening process and come to present, is that it's never, your experiences for us is going to be a teaching experience. We are not there to try to make you feel like you have a bad business. There are no bad businesses in my book. only different kinds of businesses.
Okay. You talked right at this, actually let me circle back on something about, because you were talking there about the point at which you're looking to invest so that a business has some sort of product that's probably got some level of sort of customer acceptance. But you also talked kind of earlier about sort of dating, kind of building relationships earlier. So is there a point in time at which startups should think about engaging with angels? When's the right time for them to apply to you? What's the process there? How do they know when it's right to talk to you, when it's right to apply?
So one of the things that I really appreciate that we try very hard to do is to be open at any point in the process. I really appreciate the entrepreneur who calls me up very early on, even when the business is a concept, and says, I'm thinking about doing this kind of business. Is this appropriate for angel financing? Yes or no? And at that point, we can sort of go through what the process would be, when to apply. We have a very simple minimum viable website built by a certain 60-year-old that I know for free, because we did learn that we didn't need a really great website to give away money. That's a non-necessity. But it's frontierfund2.com. You can go there. We use our back end as a new startup out of New York called Procedure. You make an application there. It comes through to our 5 screening committee members. It's a secure site. We screen, and we often will call back the entrepreneur and say, okay, clarify this a little bit more. What do you mean by this? Like, who's your real customer? Just those kinds of things. And we up or down. And sometimes when we say, no, not this time, that doesn't mean no forever. Okay. It maybe means no next time. It is not a black and white, point A, point B, point C. but it's more of a continuum. So from that standpoint, call me, and if, for example, you want to do a SaaS business, I've got 3 or 4 of the best SaaS people in the country from Right Now Technologies in the fund.
Mm-hmm.
And I'm happy to do a 10 or 15-minute call with you as an entrepreneur. That's a $500 an hour consulting person. And
Right.
so that's sort of, no entrepreneur succeeds who is shy about seeking good wisdom and good advice.
Awesome. That sounds like a pretty good spot for us to sort of conclude, but are there any kind of final thoughts that you think a startup entrepreneur should be thinking about in relation to angels?
Know them, love them. We love entrepreneurs. It's one of our biggest challenges is that we do love entrepreneurs, or we wouldn't be doing this. But we're very, very encouraged and excited about all of the assets coming together to support the innovation economy. And I want to particularly thank you, Paul, for the work you do at not only the LaunchPad, but at the university and through Hellgate Venture Network. It's all of those ecosystems collaborating are weaving a really great piece of fabric for us here. So thank you.
Yeah. Well, it's fun, right?
It is a blast. I'm addicted.
Excellent. Liz, really appreciate it. Thanks for joining us today.
Thank you, Paul.
Thank you.